Let's take a look at what's happening. We keep on talking about the data space and Safricom launching a new price war yesterday, offering fixed rate tariff for its data offering as opposed to charging customers per usage, and that discouraged heavy internet users. It's taking on Telkom Kenya in this space. Stock closed up 1.3% to 3.70 shillings yesterday. Your take on what's happening in the data space in Kenya?
Well, I think Safricom clearly have a head start, and really the next great frontier for the mobile business, whether it's in Europe or Africa, is actually around data, the internet, the mobile internet. And I think in this regard, they've got a very strong lead. They've got a lot of customers on their network, and I think what they're doing here is actually locking these customers in. I agree that they're going head to head with Telkom in their offer, but I think the company that's actually caught in the crosshairs is going to be Access Kenya, who are down about 51% this year and are certainly feeling the blowback from this heightened competition coming out of Safricom.
Looking at Access Kenya now, looking at its website, it says it's still got a 32% share of the corporate market, and that's more than double its nearest competitors. But as you say, you've got the entrance of these large telecoms players into the data space. Does Access Kenya have a fighting chance to niche itself in, say, perhaps the corporate space when it comes to internet service provision?
Well, I would have thought that the corporate space is becoming more and more dominated by companies that are not only in Kenya but in other places as well. And therefore, the likes of Access Kenya, who can only give them a product offering in the confines of Kenya, I think are going, this might be the apogee of Access Kenya's market share in the corporate space. I don't see it going any higher. I see risks to that share eroding very fast.
On the back of that, we've got the share price trading at a low of 350 shillings. You said it's given up almost 50% of last year's gains, and it's way below that 2007 IPO listing of 10 shillings.
Absolutely.
Is the company, given the fact that it's trading at such a cheap price at the moment, opening itself up to a hostile takeover from the likes of perhaps a Safricom?
I'm not sure whether it's compelling to Safricom, but I would have thought at this point in time there must be companies running the slide rule over Access Kenya. I don't see it any longer as a sustainable business model. I mean, I think it might make most sense for them to try and extract a price at this point in time. I know they'll probably disagree with me, but the way I see it, I think they're being crunched between some very large elephants in the room.
Some strong first half results for Equity Bank are released yesterday. Yes. 57% year-on-year increase in earnings per share to 1.28 shillings. The company appears to be doing well on the top line and the bottom line. What are your thoughts on these results?
I'm a great admirer of Dr. James Mwangi. I think he's built a phenomenal business and he's always outperformed market expectations. However, in these set of results, a huge chunk of bonds have been transferred from the dealing account into the held-to-maturity account and have hence escaped a mark-to-market, which would have been brutal. So looking at first glance, those results look good to me, but when I've looked a little bit deeper, I would say that they're not really representing an accurate picture to someone like myself, who's an interest rate trader and who's been through similar situations before. The bond market has suffered a brutal sell-off in Kenya in these first 6 months, and 17 billion shillings worth of bonds have miraculously gone from the trading account into the held-to-maturity account. And until I get better granularity on that, I'll hold my opinion.
Given the fact that we've still got high interest rates and going forward,
yes,
this should be a concern. As you say, 17 billion shillings worth of bonds moved. Is this a concern for you, what their full year results are going to be like and what they're going to do with these bonds, given the fact that we still have high interest rates?
Well, I don't see the interest rate curve easing at this moment in time. I think inflation is still on an upward trend, as you correctly noted about power. We're going to now be putting on a lot of expensive thermal power onto the grid, which will further spike inflation. I don't see any move lower in the price of fuel. Through February this year, 12 months through February, we spent $2.4 billion on importation of fuel. So I see further pressure and further hard currency needs. So for now, I don't see a respite in the bond market. I think unless we see a much more aggressive MPC committee in the short-term money markets, if they get more aggressive, then we might get an inversion of the curve, and then that would bring some respite. But for now, I think the bond market is looking over its shoulder. It's nervous that the MPC is behind the curve, and until they feel they've caught up with the curve, they're going to exact a higher price across it.
What do you think the MPC will do tomorrow? Some are saying that we're looking at a 75 basis point hike. Some are saying 50 basis point hike. But as you say, it has been behind the curve when it comes to monetary policy.
They've been dragged kicking and screaming into this tightening cycle, which I think is a mistake. I think they should have been far more aggressive. They should have dominated the money market. They should have hiked aggressively and put everyone on the back foot. But they didn't.
Why are they not doing it yet, though, given the fact that they had that rate decrease at the beginning of the year, which stunned the market?
Well, I think, they've thrown a number of Hail Mary passes, including that first rate cut at the beginning of the year. And I think that's their bona fides have been put into question. And I would agree with you. I don't think it's the right approach. I think the all-in cost to the government has been far higher because you've had this steepening yield curve. And what it's meant is that the government is paying far more money for its all-in borrowing than it would be if the MPC was more aggressive. And I think that's an issue which I will, which I hold. And I think the best example is to look at what's happened in Nigeria, where Sanusi has been far more aggressive. He's grabbed the market by the collar, and the market has started to behave itself. And here, everyone's looking and saying, you're not aggressive enough, runaway inflation, it's a perfect storm, high food prices, high fuel prices. And I think that's what, the government is paying a penalty in its borrowing costs for that effect.
A perfect storm, you
today,
say? Continue?
No, so today, what do I expect from the MPC this week? I think they should hike 75 basis points. I think they will probably come somewhere between 0 and 50, and I think anything between 0 and 25 will be too little and too late.
Aly-Khan, very quickly, Kenyan Cobalt's releasing first half results today. The company's been doing well, clawing market share away from the likes of Total. What are your expectations?
I think they're a very interesting company indeed. I think they've broken out of their box in Kenya. They've expanded regionally. First half results were very muscular. They gave us very aggressive positive earnings guidance 6 weeks ago. I'm expecting to see an increase of at least 50% in profit after tax year on year, and I think that will continue its bull run. It is one of the best performing counters at the stock exchange this year. It's up at least 15 or 16% in a market that's down 15%, and I continue to expect outperformance and a handsome dividend to keep the whole thing on the road.